Do you think you could buy a firm like Anthropic in this environment from a regulatory perspective?
I don't know. I mean, I think we got to be careful right now in Western countries in the way that we're handling regulation. I think a really good example of that is what happened with iRobot, if you followed that. You know, so I think it's a really kind of a sad story. It's a great entrepreneurship story where you had this, this American company that invented this product, invented the category, and built a business that was almost $1 billion in revenue. And whenever you build a good business, you end up with company and competition. So they attracted these two very large Chinese companies as competitors, and they needed scale, because scale lets you buy components at the right price and invest in R&D. So they merged with Amazon, and the European Commission blocks it because they worry that we're going to feature our vacuum cleaner, their Roomba versus others, which of course is not our model, because we make actually at least as much money selling third-party items as our own. But they block it, and then immediately after they block it, the FTC comes out and says, oh, we would have blocked it if they hadn't. And so what happens? We abdicate the acquisition. iRobot lays off a third of its staff. The stock price completely tanks. And now there's a real question whether they're going to be a going concern. Turns out with these in-house vacuum cleaners, they have to map the inside of your house. That's the way they don't run into a table or a chair. So really what Western regulators were saying was that they trust these two large Chinese companies with maps of the inside of U.S. consumers' homes more than they do Amazon, even though we've been an amazing steward of customer data in our retail business and for AWS, where customers, both those businesses will tell you that can't be what we were going for. And so I think people don't know what they can do right now, and I just think we got to try and find a way to be reasonable in what we're doing.
The FTC is looking into even the partnership that you have with Anthropic. They're looking at the way Microsoft's relationship exists with OpenAI. I'm sure they're going to look at Microsoft's sort of acqui-hire deal. I don't know what you think of that as it relates to inflection. I mean, it's very interesting what's happening. Nobody's making outright acquisitions, but in some ways these partnerships are in lieu of that. No?
Yeah, I mean, there are some acquisitions happening, but we're consuming a lot of time and taxpayers' money with what we're doing right now, and I think a lot of it is outside the bounds of the law right now.
Outside the bounds of the law in terms of how far you think the regulators are going?
I think that some of these organizations are making decisions that are outside the bounds of the law.
Let me ask you this. Since we're on the topic of regulation, I want to get into what you've done with sellers over the past year and just what's happening on the consumer side of the platform, which is a remarkable thing given how you changed the distribution model and the like. And you now have more sellers on the platform than ever. But at the same time, you have the FTC out there saying that you are a monopoly, that one out of every $2 that a seller on the platform is going back to you in the context of advertising, servicing the distribution, and the like. What do you make of that?
Well, I think you got to start with facts, and if you look at on Amazon, over 60% of the units we sell are sold by third-party sellers. It's not hard to actually create software to put up an e-commerce website or storefront. It's much harder to get distribution and access to customers, which is what Amazon gives sellers. Our sellers, on average, sell about $230,000 in our marketplace. We have thousands of sellers who sell over $1 million a year in our marketplace. So sellers are making a lot more money selling on Amazon than they could on their own. Then if you look at things like Fulfillment by Amazon, which is our service that allows you to store your products with Amazon, and we'll pick, back, and ship it for you, and it also is available for Prime shipping, that saves sellers over 70% from having to do it themselves. So it costs money, so we charge a fee for it, but it's much more cost-effective for sellers. And while there's always things that we can be doing better for sellers, and we work really hard at it, we have a great relationship with sellers.
Is it a better business, you think, to have a third-party marketplace or to have a first-party marketplace? And it's very, if you look at just the margin and the fees that you've been able to accumulate from third parties, is that a better business? Is it less capital intensive? Is it more capital intensive?
It's a very good question. They're both really interesting businesses. One of the main reasons that we have a first-party business is that it allows us to make sure for the items that customers care a lot about that otherwise wouldn't happen, that you can keep the prices as low as possible for customers and keep the in-stock levels the way you want. But wherever we have third-party sellers who are selling, it's always a great value proposition, and they sell the majority of units for us now.